Welcome to the Royal Ties Podcast. My name is Clark, the Financial Credit Coach, and I will be bringing you information acquired through first-hand experiences in order to help you increase your credit score, reduce interest rates, increase savings, and eliminate debts. Doing it for the community, from the community, and by community I mean any and everyone who wants to learn and evolve. So let's get right into it. In today's episode, we'll discuss the basics of credit scores and how they affect your financial health. Understanding credit scores is essential for managing your finances effectively and making informed financial decisions. So let's dive in. What is a credit score? I've talked about this in so many different episodes, but there's so many different ways that a credit score can be perceived, right? So a credit score is a numerical representation of your credit worthiness. I say that all the time, but your credit worthiness is all the bank cares about. Your job, minimal. Your life situation, they don't care. They want to know how trustworthy you are. So basically, it's a 3-digit number that helps lenders assess the risk of lending to you. Can you pay me back? Have you paid back money in the past? Can I depend on you prioritizing what you've borrowed from me to pay it back? Your payment history. So your payment history is the most significant factor in determining your credit score. It considers whether you've made payments on time, missed any payments, or defaulted on loans or credit cards. Credit utilization. That refers to the percentage of your available credit that you're currently using. Maintaining a low credit utilization ratio. Man, I don't like that word. That word do not get along. Okay. Maintaining a low credit utilization ratio. Okay. Ideally below 30%. You guys hear me talk about that so much, is generally seen as favorable to lenders. The length of your credit history. Now, this is an important one. I don't touch on often, but I need to. The length of your credit history indicates your experience with managing credit over time. That means over the years, how well have you paid? Good times, bad times, hard times. When you've gotten more money, have you just forgotten and said, I'm not worried about this, I'll prioritize something else? That is so important because having a longer credit history can positively impact your credit score. It actually does not can, it does positively impact your credit score, especially if you've demonstrated responsible credit behavior. It's like anything else in life. If you've got a friendship of 10 years, well, that doesn't compare to a friendship of 1 year because that 10 years, you guys been through it. You've been there. There's been a consistency. So when you have a consistency, it builds more trust. That's how the banks see it too. The types of credit. You have to have a good mix of different types of credits, such as credit cards, loans, mortgages, lines of credits. That's my favorite, lines of credits. They're definitely more beneficial for your credit score. It shows that you can manage various types of credit responsibly. Now, new credit applications. Let's talk about this one. Applying for new credit can temporarily impact your credit score, meaning you're going to see a drop in your score. Go down a few points. It's normal. Multiple credit inquiries within a short period of time can be seen as a red flag, potentially lowering your score. However, inquiries related to rate shopping for a mortgage or auto loan with a specific time frame are usually treated as a single inquiry. Listen, within 30 days, if you do a bunch of inquiries for the same type of product, most of the time, it'll fall off in a month or two without a problem. Now, if you're doing it over multiple months, it's a different thing because it looks like you're thirsty. It looks like you just are doing bad and you need money, so you're fishing for money. So they're like, why would we lend you money if you need it so badly? The key is you want to make sure you can ask for money when you don't really need it. We'll talk about that in a different episode. So how do credit scores affect your financial health? Well, your credit score plays a crucial role in your financial health for several reasons. When I say several reasons, it's tiered. There's different levels of it. So loan eligibility. Lenders use your credit score to assess your credit worthiness when you apply for loans or credit cards, right? A higher credit score increases your chances of being approved for credit and may lead to more favorable loan terms, such as lower interest rates. Yes, stop worrying about just being approved. Have the highest credit score possible so that you can get the lowest interest rate. Though we practice not paying interest to banks, but if you have to, you want to pay the lowest amount possible. You don't want to be out there in the 19, 20% with most credit cards. You want to be with the lines of credits in the 9%, 8%, 10%. That's where you want to be. That's what it is. Interest rates. Your credit score influences the interest rates you'll be offered in loans and credit cards. A higher credit score typically translates into lower interest rates, saving you money over time. On the other hand, a low credit score may result in higher interest rates, making borrowing more expensive. Simple as that. Rental application. So a lot of you say, I don't want to be a owner of a property. It's so expensive. If I have tenants, I have to deal with them not paying, and that burden falls on me. Renovations, school taxes, city taxes, welcome taxes. I don't want to pay that. I'd just rather pay my rent. Okay. Well, rental applications. Landlords often check credit scores when considering rental applications. A poor credit score may make it challenging to secure a rental property or require you to provide additional security deposits. It's going to cost you money. Even if you don't take care of that credit, if you want to go rent a place, they're going to want a deposit from you because they're like, your credit's shaky. Everyone's looking at the same thing. Insurance premiums. Some insurance companies use credit scores to determine premiums for auto or home insurance. A lower credit score may result in higher insurance premiums, potentially increasing your overall expenses. Bro, you need insurance no matter what. Even if you're renting to drive your car, you need it. Your credit score affects that as well. You can't get away from it. It's inevitable. You will have to fix your credit. You need to call Clark. Anyways, employment prospects. Did you know that even employers in certain industries, employers may review credit scores as part of the hiring process? While credit scores alone don't determine job eligibility, a poor credit score may impact your chances of being selected for certain positions, particularly those involving financial responsibilities. You want to go work at the bank, but your credit score is in the 300s? No, sir. I don't think so. Maybe some entry-level costs, call service, center service stuff, but I'm talking about high level? No. So how can you improve your credit score? Obviously, I'm telling you all the negatives of not having good credit, and let me talk to you about how you can do it. Improving your credit score takes time and effort, but it's worth it. For your financial well-being, it's absolutely worth it. So here are some strategies to consider. I'm going to give you all the rundown. Pay your bills on time. Consistently making on-time payments is crucial for a healthy credit score. Set up automatic payments or reminders to ensure you never miss a payment. My clients, they go through a rigorous process with me. I set up their calendars for them. We get notifications, and I'm on their case. Like, I really coach my people. You can't fail if you're being coached by Clark. You can't, because I won't allow you to. You just have to be consistent. I'm going to be consistent. That's all it is. So anyways, another thing you can do is reduce your credit card balances. Aim to keep your credit card balances low and pay off any outstanding debts. And when I say low, to me, it's no. Pay them off. I don't want you to have a credit card balance. If you use your credit card, before the statement comes, you pay it off completely. That's the game that we're trying to teach. Maintain a diverse credit mix. Having a mix of credit types, such as credit cards, installment loans, and mortgages, can demonstrate your ability to handle different financial responsibilities. So yeah, I always talk about credit cards with perks, rewards. I always talk about lines of credit because they have the lowest interest rates. These are the things that I want you to be focused on. If you're going to have a car loan, okay, fine. Make sure you make those payments on time. It's crucial. I prefer you pay off that car loan, but it's a different subject, right? We'll just focus on that. Another thing you can do is avoid unnecessary credit applications. Be cautious about applying for credit unless you genuinely need it. Multiple credit inquiries within a short period can potentially lower your credit score. We talked about that before, right? So don't be applying for everything all over the place when you're desperate. They know what's going on. It doesn't look good and it brings down your score. Regularly monitor your credit score. I just talked about that in another episode recently, but I love repeating it because it's so important. Stay informed about your credit score and regularly review your credit reports to identify and address any errors and discrepancies. Listen, the bottom line is credit scores have a significant impact on your financial health. Understanding how they are calculated and taking steps to improve them can open doors to better financial opportunities. Actually, it's not even that it will open doors to better financial opportunities. Listen, this concludes this episode on the basics of credit scores and how they affect your financial health. By understanding the factors that influence your credit score, you can make informed decisions and you can work towards achieving a strong credit profile. I really do hope that you learned something today. If you did, please like, follow, and share. And make sure you tell a friend to tell a friend so we can bring financial literacy to an end. My name is Clark, the Financial Coach. making credit cool. Probably can't see that because of the mic, but that's what I'm doing. I'm making credit cool. Me and you, we're going to do it together. Or you can watch me do it, but either way, it's going to happen. Let's get busy. My name is Clark, the financial coach, and my motto is simple. Pay attention or pay for lack of attention. Please follow me at Clark, the financial coach on Instagram.